The spring housing market is still trying to spring. Pending home sales inched up for the week with small gains, but are still below last year. New listings volume is trying to grow with the biggest weeks in September. List prices inched up for the week, though sales prices did not advance. There are plenty of weakness signals in the housing market, too, of course. The unsold inventory of homes on the market across the country is 28% greater than last year. Withdrawal rates are also much higher than last year. So these are the listings that don't get offers and then they're just taken off the market. Withdrawals keep a lid on inventory growth. So that suggests there's a shadow inventory of homes that want to be sold, but there isn't a market for it. Meanwhile, the pending sale price to list price ratio is declining at a pace which suggests that any spring home buyers are acting really only when they find a bargain. And by the way, next week, Thursday, March 20th, will be our monthly webinar. That webinar is where we have the time to dive into all these advanced signals on the data. We have tons of visibility on the spring market and how we're set up for the whole year. The big questions we're answering now are whether the weak housing market can have any chance of turning around. Are there any signs of sales growing in 2025? So what we will always, as always, take a time to look at the local markets. We're keeping close tabs on the very weak Florida markets, for example, but also asking if the Northeast will be able to maintain strong pricing like last year. Lots to cover. There is a link in the description below to register for the Altos March webinar. These are limited to 1,000 attendees, and we get way more than that every month who want to join. So click that link now to reserve your spot for next week, March 20th. Okay, on to this week's data. Home sales. So let's start today with pending home sales. We counted 63,000 newly pending home sales this week for single family homes. That's up 5% for the week, though still running a couple percent behind the same week a year ago. So up 5% for the week was nice. Uh, it is the most pending home sales we've had in a given week since August. So the spring is starting to take shape. But since January, the pace of home sales each week has been running about 3% fewer than a year ago. So 2025 still has fewer home sales than 2024. So in this chart, we have the weekly pending home sales data. See the purple line for 2025 keeps coming in just below 2024. And there's nothing in the data that shows this trend changing yet. However, we are at an interesting point in the interest rate cycle. Last year at this time, mortgage rates were heading higher to peak in May at 7.5%. This year, rates have been easing down for several weeks. So right now, the with 30-year fixed rate averaging at about 6.6%, that's below the cost from last year at this time. So as mortgage rates move into relatively cheaper territory, we're going to see if the marginal demand picks up in the next few weeks and maybe lifts the pace of sales above those from 2024. Last year in the second quarter, that was the most expensive time to buy a home. This year, if current trends hold, we could be already past that point in 2025. So if so, that could help home sales finally turn around in the second quarter. So watch this line over the next few weeks. To be clear, if home buyer demand patterns hold from last year, that implies we won't see a lot of movement in purchases until rates get closer to 6% like they did in September. So right now, we're only watching for marginal moves in demand. No one is expecting any big gain in home sales. The other thing to note with this spring's market is that the withdrawal rate is pretty high. So we calculate that while there were 63,000 newly pending single family home sales in the week, there were another 20,000 withdrawn listings across the country. So that is, these are no longer listed for sale and they're not in contract. So they could come back on the market as relists later in the year. So that is something to watch. Okay, on to home prices. At HousingWire, we forecasted that the US home prices would climb about 3.5% in 2025 over the previous year. So these are pretty low expectation for home price appreciation, but the data hasn't pointed negative yet. So low, but not negative. When you make a forecast like that, you can ask yourself, if the data changes or if some of our assumptions are wrong, where's the risk? Which direction are we likely to be wrong? And if you've been paying attention to the weekly housing market data here, you'll know that the risk right now is to the downside. So we are watching for signals that home prices might turn negative nationally in 2025. Between stubbornly high mortgage rates and all sorts of new economic chaos that was hard to foresee even a few months ago, we are watching for signals that housing demand weakens further and home prices drop. Those signals are not here yet for the national overview. There are plenty of local markets where home prices are below last year at this time. And we're watching a bunch of home price measures so that we can report exactly on these trends as they happen. So the first measure to watch is the median price of the week's pending home sales. So that came in at 389,900 this week, 389,000. That's unchanged from a week ago. It's 2.6% above last year at this time. So that's the chart here. We've plotted the pending home sales price curves for each of the last 4 years here. The purple line is 2025. It's barely above last year's blue line. The seasonal market peaks in May before easing down in the second half of the year. Year to date, our forecast, though, for home prices is actually too high. So there's plenty of the year left. So, we're still maintaining our forecast of 3.5% home price gains for the year. Last year, when rates touched 6% in September, the remainder of the year actually had enough demand to support prices. And you can see that in the blue line here at the right end. But as of now, home prices are barely above last year. These weekly pending home sales are the earliest proxy for the sales that will complete later in March or April, and those sales are not yet closed. The price of the active market listings is $435,000 now. That's up 1.2% from a week ago and is just fractionally above 2024. The price of the newly listed cohort came in pretty strong recently at $435,900. That was a jump of 2.5% for the week. It is currently 3.7% above last year. So these active market listings lead sales prices, so they're valuable to track. So when a home gets listed for sale in March, the seller and the listing agent use all the information about possible buyers and traffic and other offers to price that at the most likely price to sell. So when we see strength or weakness in the active market prices, that's several months before the sales happen. So the signal right now in the active market pricing measures, uh, it keeps our expectations in the just barely positive range for the next few months. So home sales prices just barely positive for the next few months based on the signals we can see right now. Now, the other leading indicator that I like to share each week are the price reductions, the percentage of homes on the market that have taken a price cut from the original list price. So the price cuts ticked down 10 basis points to 33.6% this week. In the chart here, we have the purple line for 2025. You can see above any recent March. That's the same pattern holding from February. Demand is not great. Inventory of unsold homes is climbing. The sellers that don't get an offer, they either have to cut their prices or they withdraw the listing. And both of those metrics are elevated now. The cool thing about this price reductions metric is that it's very sensitive to changes in demand. So at moments, for example, when mortgage rates jump, that means some offers don't get made. Some sellers then immediately cut their prices. So this line adjusts very quickly. In a deteriorating market, price cuts move quickly. So the signal right now is that while elevated, price cuts actually ticked down a little bit this week. So that may be the market reacting to 7 weeks of improving mortgage rates. Beyond changes in rates, I'll be watching the price reductions stat for changes in the economy as unemployment grows or perhaps recession looms again. The macro landscape is changing very quickly right now, so stay tuned and we can watch the price cuts as a leading indicator. So, on to the supply side of the equation. There was a nice jump in the new listings volume this week. There were 64,000 single family homes newly listed, with another 12,000 new listings immediate sales. So, that's 76,000 total home sellers for the week. That's just fractionally more than a year ago, and the most new listings since September. So, the spring market is trying to emerge. In this view, I have the weekly new listings volume. Each bar is a week. The taller the bar, the more home sellers. At the left end of the chart, that's 2021 and 2022. We used to have a lot more home sellers in this country. And it's wild how rapidly home sellers walked away in July 2022. Then we entered the post pandemic era. So this week at the far right end of the chart, there's a nice jump for this week of March. And I've highlighted the same week for the last 2 years. So there are slightly more sellers now each week. Uh, in general, I interpret any growth in the new listings volume as a good thing for the housing market. In fact, I'd say year to date, I've been disappointed in the growth of new listings. There aren't enough sellers in many parts of the country. Uh, if we're lucky, we'll get several more weeks of new listings growth in March. So stay tuned for that. But as a result of all those things, the unsold inventory of homes on the market in the US inched up by 0.5% this week. There are now 642,000 single family homes unsold on the market around the country. That's a little nudge up for the week. And we are expecting bigger increase in next week's data. So maybe 1% increase per week in inventory as we head into March and April. Uh, when the market is really slowing, like it was in 2022, then inventory might climb 2% per week. I don't see that happening this year, but inventory should be on the way up for the spring. So in this chart, each line is a year. Most years have pretty strong inventory growth in March, April, May. The year over year chart here shows uh, how, as inventory increases in 2025, we'll get very close to the old normal levels of unsold inventory, 2019 at the end of the year there. With greater supply on the market, that implies better selection for home buyers and less upward pressure on home prices. So there are 7 or 8 states that have more inventory now than in 2019. Interestingly, though, the number of states, those states that have more inventory than before the pandemic, it hasn't changed in months. Texas and Florida have a lot more inventory unsold than a few years ago. Those are the two biggest housing markets. The rest of the country is still catching up. In the webinar next Thursday, March 20th, we'll do a state by state analysis of those inventory trends. If you haven't saved your spot for the webinar, there's a link in the description below. Okay, that's all the time we have for today's data. If you need to communicate about this market with your buyers and sellers, you should join us at Altos Research. Go to altosresearch.com and you can now sign up for a free Altos account to get your local data. We'll dive into your local market and help you start helping people understand the market today. So go check that out at altosresearch.com. There's a link for that in the description below, too. All right, we'll see you next week.